11% on the back of fresh positive brokerage calls. So we're joined by Amit Agarwal, the Group CFO of Raymond, to discuss the business momentum and what he's made of the demand environment as we approach the festive season. Of course, that Jefferies brokerage report is something that got the stock all active this morning. Thanks a lot for joining in, Mr. Agarwal. You know, the demand in Q2 was expected to be muted. So just to understand, how are the inventory levels as of now? Is it worse than anticipated? And what's the expectation on demand?
It was well planned by all of us during the beginning of the year that this year the second quarter will be weaker than the normal quarters because of a simple reason, as there has been in this Adhik Mas and Pith Praksh extending up to 15th of October. Post that, we are very, very confident that the markets are coming back. We had a very strong dealer meet recently where everybody talked about there is a very big demand which is on its anvil, especially because of the festivities and the weddings. You see, the summer, the weddings have been very, very low. And so there is a very strong expectation that second half of the year, the weddings are going to be very good. People have not spent money for almost 7, 8, 10 months. So there is a lot of spending which is waiting to happen. And discretionary, as it is called, especially in our segment, which is the fabrics, apparel, and occasion-led purchases, I think we are going to see a strong demand for our products.
Okay, so with the festive season approaching, let's focus on ethnics, right? Currently, it's a very small business contributing around 55 crores. Where do you see it go to in the near term? What is the target that you have for FY25, considering that this is going to be a big festive season?
We are on an expansion phase. As we have talked earlier, we plan to open over 200 stores over the next 3 years just for the ethnics. And for the other EBOs, for the other brands like Park Avenue, Color Plus, we are opening another 400 to 500 stores over the next 4 to 5 years. So therefore, we see very, very big journey. Now, obviously, I am not going to give you a specific guidance what number we are targeting, but we are targeting a significant growth in the numbers of ethnics because it is just the starting. And the true testimony of ethnics of the revenue will come around the end of October, November, when we see the full cycle of the wedding seasons comes in the play and the stores have opened and we are expanding the stores. So far, we have been very, very happy to say that it has been beating our expectations whichever stores we have opened.
Yes, we understand that, and recently we also did speak to Vidyut Bhanjdev of the ethnics business specifically to understand the larger opportunity there, and of course it will do better as we move towards the festive and the wedding season. But operationally, you've been implementing the SAP system, right? I just wanted to understand what could the near and medium term impact be on the financials of this one, because we saw Page Industries do that recently and a couple of quarters saw delayed sales in that regard.
By putting these technology investments, we see our supply chain management will become more and more robust. And especially when you have a supply chain robustness achieved, your on-time in full delivery performance also improves so that what the customer needs will be available very quickly. The other thing which we are also implementing is the omni-channel presence. So that something is being made available in a store and maybe it doesn't fit your size, but the store fellow knows that a closer store, maybe 5 kilometers from there, has a similar size, he can get you that product. So omni-channel is something which we are also working upon. And obviously, when you put these technology investments, you are going to see an improvement both in terms of revenue as well as on the cost side, as well as working capital. Especially when we talk about the supply chain management, I think working capital management, especially the inventory levels across the chain, will also help us to improvise. Though we have done a decent enough job in terms of reducing our net working capital from 105 days to in the range of 55, 56 days. I think that apart, we still see that by implementing technology into the system, we should be able to squeeze out a few more days.
Okay. You're also now focusing on the non-Thane markets. Apart from Bandra, which other areas are you looking at? And you aim at getting new projects worth around 3,000 crores every year. How much have you got in this fiscal itself?
When we talk about non-Thane, you know that we have already signed one project in Bandra. And we are very clear that we will be looking for the various JDA projects in the MMR region. We are not going beyond MMR region. Second, at this stage, we are already talking to 2 or 3 projects between the eastern suburbs as well as in the Navi Mumbai segment. We have identified some projects. We are on the close context, let's say almost 90% there in terms of finalizing the projects. And once we have finalized the projects, we will obviously come out and give you the details. But we see very clearly at this juncture, we are constructing on a carpet area basis 5.5 million square feet. And hopefully in the next 4 years, we should be a 10 million square feet running projects on a constant basis. So that means a delivery potential of 2 million square feet every year. And with Bombay rates roughly 20,000 square feet per, you can assume obviously pre-sales booking of around 4,500 crores in that circa range over the next 4 years or so, which could be almost 40% to 50% non-Thane and 50% Thane. So therefore, you will have a very healthy mix between a Thane and a non-Thane and delivering 4,000 to 4,500 crore pre-sales bookings.
All right, 4,000 to 4,500 crore pre-sales bookings and 50% from non-Thane. But Alok, you're joining us here from Singapore. I know that you and the top leadership team is meeting multiple investors over the next 3 days. Now, there are no deals or fundraisers on the cards in the near future, or is there? I mean, just wanted to understand what exactly is the purpose of these non-deal sort of roadshows that you're doing?
The fundamental behind this is very simple, that we have outlined what we have been able to deliver, and which, if you see item by item, we said we will be a net debt-free company in 2025. We have been able to deliver sooner. We said our projects and profitability will come very, very strong. If you see the track record of 8 consecutive quarters, we have tracked record performances. Third thing, the real estate project completion 2 years ahead of RERA once again demonstrates that our capability to execute a project. Fourth, if you see ethnics, we have very clearly outlined that we will be launching the number of stores, and we are absolutely on track for launching the stores. Plus, now with the demerger of the business and the sale of the FMCG happened already, we are sitting with a 1,500 crore of cash. Now, with this 1,500 crore of cash, which is going to be clearly available for the growth of both the businesses. And we have also outlined the demerger of the business. I think all these businesses, so we will have a one lifestyle pure play, net debt-free business, one real estate plus engineering, net debt-free listed business. So therefore, what we want to come here, talk to the investor community is explain all things, the steps which we have taken, and how we see going forward unfolds the future for the Raymond Group.
Okay, all right, Mr. Agarwal, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Raymond. That stock is buzzing in today's trading session, up around 10% odd. Remember that the likes of Jefferies as well as Motilal have come out with a coverage on the stock with target prices of around 2,600 odd rupees. So maybe some amount of upside potential is what they expect. We'll take a short break.